And now to get weekly updates on what's been making news within the Sub-Saharan African region, we've got Yvette Babb, Africa Strategist at Standard Bank Research, joining us. Thank you so much, Yvette. And I'm not sure if you could hear the conversation. We're just talking to an economist over in Namibia and talking of the inflation figures set to be released sometime next week. And he's talking of a peak number into this year of around 8%. Do you concur with this number?
Yes, we are looking for some upward pressure in the Southern African region in terms of inflation, and Namibia will not be spared from that. So I would have to concur with his view there.
Let's also just touch on what we've been seeing out from Ghana. We saw Ghana inflation coming through. That inflation rate rose to around 8.8% in March. We know that the cedi's actually weakened, and this is one of the reasons that we've actually seen a bit of a heightened number in the inflation figure.
That's correct. We did see some upward pressure on, for example, the clothing and textiles sector of the CPI basket, and that was attributed by the statistician from the Central Statistics Office to the weakening of the cedi. The cedi has weakened considerably since the end of July last year, losing about 20% of its value against the United States dollar. So this undoubtedly is feeding through to some of the prices of imported goods. We did, however, see that a large portion of this inflation did come from fuel prices through transport, and also that some of the upward pressure emanated from a slight uptick in food inflation, which was on the back of rising prices of domestically grown goods.
We're looking at a very high inflation figure that's coming in, I suppose, but when you actually look at what's happening on the growth front, Yvette, we saw 14.5% growth last year. What kind of numbers are you expecting into this year?
Indeed, so 14.4% growth was mainly on the back of a significant expansion in the industry, and more specifically the mining and quarrying part of the economy, obviously related to the influence of oil output in the Ghanaian economy. So as we move into 2012, we do expect that growth will remain robust, but we will, however, move to a higher base, obviously, as the output of oil will not be as significant in terms of an impact on GDP growth as it was in 2011. So we're looking for growth just above 8% in 2012, which is, of course, robust when we look at that on a regional, but even more predominantly so on a global scale. We're also looking for a slight improvement in the agricultural sector. We saw quite limited growth in that sector in 2011, only expanding by 0.4% in 2011. We're looking at that to be slightly higher in 2012.
Okay, so the cedi has weakened, and we know that that could be an upside risk to inflation. We've got the MPC decision in Ghana tomorrow. Can we expect no movement, given the fact that we have seen quite a lot of upside risks, Yvette?
Well, we're of the view that it would be desirable to tighten at this point in time, not least to tighten liquidity somewhat from a domestic front to arrest some of the upward pressure that we've seen on the Ghanaian cedi. As I mentioned, it's lost 20% since July last year and 10% even year to date. It's competing with the Ghanaian franc as the worst performing currency across the globe, according to those ranked by Bloomberg this year. And we do believe that tightening would arrest some of that upward pressure due to its impact on local rates, that could offer some protection against the upward pressure on the currency, which is now reaching 1.8 against the United States dollar. However, there could obviously be some resistance against this move. We are in an election year. Obviously, it's not a very strong desire, I would argue, to put a damper on GDP performance in 2012. So it is likely to be a close call. If you look at the Bloomberg survey, 5 analysts are looking for the rates to be put on hold, but we would be amongst the minority of those analysts that are looking for interest rates to be increased tomorrow in the MPC meeting.